Earnest money is a good faith deposit that shows your seller you're serious about purchasing the property. It's not an extra charge added to the price of the home. Basically, once the contract is accepted, that deposit is typically delivered to the title company, which holds it until closing. And assuming that transaction moves forward, the amount is normally credited towards what you owe at the end of that process. So, in other words, you are not paying for the house twice. Part of your money is simply being collected earlier in the process. And the concern that I hear most often is whether a buyer can lose it. And that can definitely happen, although it's not as random as most people think it can. Your contract contains specific protections and deadlines. When those terms are followed correctly, you may have the right to terminate and recover your earnest money under certain circumstances. Missing a deadline can definitely change those rights. That is why knowing when something is due matters more than memorizing a definition. If you are getting ready to buy, tell me in the comments, which stage are you in right now? You may be researching, touring homes, speaking with a lender, or preparing to write your first offer. The answer really helps me know what parts of the process need a deeper explanation in future videos. So let's talk about option money and the option period. Texas buyers will also hear the phrase option money, and although both payments are made near the beginning of the contract, they serve two separate purposes. So your option fee purchases a defined period of time to evaluate the property and decide whether you want to proceed with your purchase. During that window, you can complete inspections, you can review findings, ask questions, negotiate repairs, or terminate according to those contract terms. Think of the option period as your investigation stage. You have not closed on the home yet, which means this is the time to learn about what you're actually buying. Once that deadline passes, your ability to walk away from the contract may be more limited, and so you really want to be thorough in that investigation. A calendar date that looks small on the contract can actually carry a great deal of weight. The fee itself may vary based on the offer, the market conditions, and your negotiation strategy, but its value really comes from the flexibility it gives you, not from that specific dollar amount. So buying a home involves a lot of emotion, especially when you're trying to find the home that feels right for you. And an option period creates space for facts to catch up with excitement. And then we're going to go into the inspection period now. So many buyers approach an inspection as though the home will receive either a passing or a failing grade. And unfortunately, real houses don't work that way. There's not a pass or fail. So even a well-maintained property can have a long report because inspectors document every single thing: visible conditions, safety concerns, maintenance needs, and systems that deserve a little bit closer attention. And I will say new construction is not exempt from those findings either. Your inspector may identify something minor, such as maybe loose fixtures or missing sealant. And then another section could reveal a repair that affects your budget tremendously, or maybe even your willingness to move forward with the purchase. So the report gives you information rather than a final verdict. And once you understand the condition of that property, you can decide whether the issues are manageable and you want to move forward. Negotiations will follow that depending on the findings and the terms of your contract. And then a seller may either agree to complete certain repairs, but in other situations, the parties could discuss maybe a credit or a price adjustment. And then occasionally the information changes the buyer's opinion of the home completely. And I will say none of those outcomes means the inspection caused a problem. The problem was already present. Your inspection simply helped you see it before you got to closing. So the appraisal answers a very different question. Instead of evaluating every component of the home, the appraiser actually develops an opinion of its market value for the lender. So banks want to know what the property reasonably supports for the amount being financed. And let's suppose you agreed to buy a home for $350,000. Before lending against that purchase, the lender needs evidence that that value is supported by the market. And so that's why they hire an appraiser to come in and look at comparable sales, property characteristics, condition, and location, and those can all influence the appraiser's conclusion. So when the value meets or exceeds the contract price, the financing process can continue without any appraisal related issue. But a lower result requires a closer look. So that outcome does not automatically end the transaction, but your available options, depending on the contract financing, your cash position, and the willingness of both sides to negotiate. So sometimes the seller does want to reduce the price to get the home sold, and then maybe another deal, the buyer may have to cover part of that difference to be able to continue with the purchase. So under certain circumstances, the buyer may have an appraisal protection that creates another path, because VA and FHA buyers it does have to appraise at value for them to move forward. And so they may have a contingency that allows them to pull out of the contract if for some reason it doesn't. And obviously, because each situation is different, you should never assume a low appraisal means you're either trapped or completely safe. Obviously, you need to review the contract before deciding what happens next. But the simplest distinction to remember is an inspection helps you understand the home's physical condition, while an appraisal helps the lender evaluate its actual market value. So those reports are not interchangeable, but which one did you previously think protected you more? Do you think the inspection or the appraisal? Leave your answer below, because this distinction actually surprises a lot of first-time home buyers, and I'd love to hear your feedback. A survey may be one of the least familiar documents in the transaction. It basically shows the property's boundaries and how certain improvements sit within them. So fences, structures, easements, utility access, and other details may appear on that drawing. And at first glance, the document can look super technical, but its purpose becomes much clearer when you consider what could happen without it. So let's say a fence may not follow the legal property line, or part of the structure could extend into an easement. So when you're looking at future plans for that property, like maybe a shed addition or a driveway or a pool, those may be affected by the restrictions you didn't know existed. So discovering those details before closing gives you time to ask questions about that. And honestly, learning about them after you own the property gives you way fewer options. So some transactions can use an existing survey if it meets the required standards and still accurately reflects the property, but changes to the home or lot may create the need for a new one. Your title company, your lender, and your real estate agent can help you determine what applies to your specific purchase. Lender conditions. So at some point, your lender will probably ask you for a document you believe you've already provided. And I will say that request can feel super frustrating. It's also extremely common. So mortgage underwriting involves detailed verification of income, employment, assets, debts, insurance, and the source of certain funds. So a bank statement might trigger a question about a large deposit, or updated pay stubs may be needed because time passed after your initial application. Employment could be verified again shortly before closing, and none of those requests automatically signal a problem. Often the underwriter is simply completing the file according to the lender's requirements, and prompt responses help keep that process moving forward. If you wait several days to send a requested item, that can significantly delay the approval, and especially when another review is needed afterwards. So avoid making major financial changes while your loan is in progress unless you have spoken with your lender first. Financing furniture, changing jobs, moving money between accounts, opening a new credit card, or buying a vehicle can affect the information used to approve your mortgage. A purchase that seems maybe unrelated to that home could create extra questions at exactly the wrong time. Closing cost. Your down payment is only one part of the money needed to close. Additional expenses may include lender charges, title-related costs, prepaid insurance, taxes, escrow funding, and other transaction fees. The exact total varies by loan type and purchase details. And I will say a VA buyer may have a way different structure than someone using FHA, conventional financing, or cash. Seller contributions can sometimes reduce what the buyer brings to closing, although those terms must be negotiated and allowed under that certain program. So your lender will provide disclosures that estimate these expenses. I would say review them carefully rather than focusing only on your monthly payment, because a home can fit your payment target for your monthly payment, but it may still require more cash at closing than you expected. So it's extremely important that you look through these. I will say good planning solves that problem before you fall in love with a property. So during an early consultation, I would rather walk you through those numbers slowly and answer every single question than let you discover an avoidable surprise 3 days before closing. My fifth grade students did not at all understand a new math concept on the first explanation, and I don't feel like home buyers should be expected to understand an entire Texas contract immediately either. I will say questions are a part of the process. I always encourage questions, and no question is a stupid question. So make sure that you're asking those so that you feel prepared and plan to move forward. So how do these pieces connect? Well, every step serves a different purpose. Earnest money demonstrates your commitment to the seller. Your option period gives you time to evaluate the home and make sure you want to move forward with that purchase. An inspection reveals information about its condition, while the appraisal addresses value for financing. Property boundaries and easements become clear through that survey that we talked about. And then underwriting moves your loan toward final approval, and closing costs cover the expenses required to complete that purchase. The transaction feels very overwhelming when those items arrive at disconnected request. So once you see the sequence, I will say the process becomes much easier to follow. Basically, you're going to write an offer with specific terms. After acceptance, deposits and contract deadlines begin. You will start with inspections that usually happen early because your option period is limited, usually around 7 to 10 days. And then you will have your financing, appraisal, title work, survey review, insurance, underwriting, and then you will continue to move towards closing. Before ownership transfers to you, you'll complete a final walkthrough and sign those remaining documents. And I will say each phase prepares for the next one. So knowing where you are in that sequence helps you ask better questions and respond with confidence. So buying your first home in Abilene should feel exciting, but excitement does not have to come with confusion. You're allowed to ask what a term means. You should understand where your money's going, and every deadline needs a clear explanation before you are expected to act on it. I will say the strongest buyers are not always the ones who know every single thing about the process, but they are the people who get informed before they make those decisions. When you are ready to start that process, I can help you work through it one step at a time without rushing past those details that actually matter. Leave any remaining questions in the comments, because your question may be the exact topic another buyer needs explained next. Subscribe for more straightforward guidance about buying, investing, and living in the Abilene area, and use the consultation link when you are ready to talk through your own situation. I'm Ashley Hernandez with Elite Real Estate Group, and until next time.